Many people who want to invest in Tesla were shocked when the price of its stock dropped recently. Many people are afraid that Tesla is going to go downhill, since the company shared its numbers for the fourth quarter. Tesla stock has hit a low point not seen in 3 months. What does this mean for people who own Tesla stock? Should you buy, sell, or hold Tesla stock? Watch this video one more time to learn more. Based on their fourth quarter profit report, Tesla continues to make big steps forward in the business of making electric cars. EV maker said it made a profit because more cars were being delivered. The amount of money made is a record. Even so, the company is still having problems with logistics that affect the whole EV business in 2022. It's possible that Tesla will still have trouble with their supply chain this year, just like they did last year. The price of its shares has dropped by 30.9% so far this year, from $1,200 per share at the start of 2022 to $829.10 per share at the end of January 27. This happened just one day after the earnings report came out. Tesla's sales in the fourth quarter were $17.72 billion, up 65% year over year, and the company made a record high $2.32 billion in profits, which is an increase of 760%. An annualized run rate of almost 1.22 million vehicles were made in the fourth quarter. With 940,000 cars delivered in 2021, the EV maker reached a new record number of cars delivered. Problems with the global supply chain and a lack of semiconductor chips made the findings worse. In its presentation, the manufacturer said, "Global supply chain transportation, labor, and other manufacturing problems persisted in Q4, making it impossible for us to run our factories at full capacity. Our goal is to speed up output as much as possible." The company said that they would increase production at their new plants in Austin and Berlin and also make the most of their existing factories in Fremont and Shanghai. To be competitive in the EV market, we think you'll need to be able to add capacity across the supply chain and speed up production. Over a number of years, Tesla hopes to see an average annual growth of 50% in the number of cars it delivers. But the rate of growth will rest mostly on how much equipment they have, how well it works, and how stable and full the supply chain is. These problems won't go away anytime soon. But one thing we know for sure about Tesla is that they're great at coming up with new ideas. The big company that makes electric cars may have a rough year this year, but they are working hard to get around the main problem. For several quarters, their factories have been running below capacity because the supply chain is still giving the business trouble. Tesla is also working on improving its software for self-driving cars and making more cars at all of its factories. They said that in the long term, the full self-driving software will still be one of the key areas of focus. The profit from the software is supposed to help them make more money overall. The self-driving software is an important part of the plan to change the business. As soon as it's finished, it will greatly enhance car safety and help the world switch to more environmentally friendly energy sources faster by encouraging more vehicle use. Tesla's presentation says that the company has enough cash on hand to pay for its product roadmap, long-term capacity growth goals, and other costs. The company will also keep looking for ways to lower its production and running costs. The software part of the business should bring in more money faster. Because of ongoing problems in the supply line, Tesla will not release the new models until 2023. Elon Musk, CEO of Tesla, said on the earnings call that the company spent a lot of engineering and management time and money last year fixing problems in the supply chain and changing and lowering the number of semiconductors needed to make cars. This allowed the company to make more cars. Other car companies had to cut back on production at the same time. But because of limited supplies of semiconductors, Tesla wouldn't have been able to make a new model in 2021, and the total number of vehicles would still have been the same. Musk has said that the company would have to spend a lot of time and money on making another product if they did make one. Because of this, fewer cars will be sent to the market because the product is now more complicated. But Tesla's CEO has made it clear that the company will not be releasing any new car types this year. He thought it wouldn't make sense because the company is still having trouble getting the parts it needs for production. He did say that they would do a lot of engineering, tooling, and other things to make the Cybertruck, Semi-Roadster, and Optimus cars, and be ready to start making them hopefully next year. Tesla chart research shows that the stock went up by 76% in 2021, reaching an all-time high of $1,243.49 during the day and ending the day at a high of $1,229.91 on November 4, 2021. It is now the fifth company with a market value of over $1 trillion. Hertz, the car hire company, told them that it was going to buy 100,000 Teslas by the end of 2022 in North America and build new charging stations for electric vehicles all over the world. The price of the stock went up from $909.68 on October 22. Musk did tweet on November 2, though, saying that if the stock price went up, Hertz would not get a special rate because the company had not signed a deal, which caused price to go up. On November 6, Musk shared a poll asking if he should sell 10% of his Tesla stock. He also said that he would follow the results of the poll, which 3.5 million people answered yes, giving it a 57.9% vote. According to filings with the U.S. Securities and Exchange Commission, SEC, Musk started selling a lot of shares in November and December. He has also used his options to buy shares. The stock price dropped below $1,000 because of the big sales, and the markets as a whole lost value because of high inflation caused by the U.S. Federal Reserve's decision to stop buying assets and raise interest rates in 2022 at the end of December. The stock price went back above $1,000 and hit $1,999.78 per share on January 3. Since then, though, the stock has gone down. Year to date, the S&P 500 average is down 9.8%. MarketBeat says that after the earnings report on January 26, the price dropped from $918.40 per share on January 25 to $829.10 per share on January 27. Analysts who have predicted the price of Tesla stock over the next 12 months have given it an average price goal of $916.50 per share. They have seen it go as low as $250 per share and as high as $1,580 per share. There were 14 suggestions to buy, 10 suggestions to hold, and 8 suggestions to sell. At least 6 investment banks raised their price targets for Tesla stock after the figures were released. Citigroup raised its price target from $262 to $313 per share, but kept its sell rating. JP Morgan also raised its price target from $295 to $325 per share, but kept its underweight rating. Oppenheimer raised its price goal for the stock from $1,080 to $1,103 per share, while keeping its outperform rating. The price goal for Robert W. Baird's shares went up from $888 to $1,108, but the firm kept its outperform rating. We still think that Tesla's impressive goal trajectory for its battery technology, manufacturing capacity, and especially cost could help speed up the world's move to electric vehicles and give Tesla a much bigger lead in the EV market. Indicators for Tesla technical analysis on all time frames except 1 month showed sell or strong sell signs on TradingView at the time of this video. We saw that the basic exponential volume weighted moving average, the whole moving average, and the moving average convergence divergence, MACD, were all negative. While it says that basic support for investors was at $806 per share and fell to $736 per share. Resistance rose from $876 per share to $946 per share. According to Wallet Investor, the algorithm-based predicting service thought that Tesla's stock price would go up this year and get close to the all-time high of $1,237 per share by the end of the year. It's possible that the stock will be worth $1,654.22 in December 2023, $2,492.72 by the end of 2025, and $2,950.80 and 38 cents in 5 years. It's important to keep in mind that the stock markets are very unstable, which makes it hard to guess what the price of a share will be in a few hours and even harder to guess what it will be in the long run. So, both experts and predictions based on algorithms can and do get it wrong before making a financial decision. You should look into the latest market trends and do your own study. News about Tesla, technical and fundamental analysis, and the thoughts of experts. Remember that past results don't always mean that future results will be the same. Also, never risk more money than you can afford to lose. Why do you think Tesla's stock will go down in value? Leave a comment below.